VinjaGPT.com.
Welcome back, investors. Welcome to a new video on our value investing channel. In this video, we'll be analyzing Pernod Ricard, which is one of the largest spirits and wine companies in the world. And this has been a request from one of our YouTube users, so thank you for that. So for the rest of you, if you're interested in us analyzing a specific company, feel free, of course, to submit the proposal in the comment section and we'll review it. And we already have a couple, like, for example, one of the next ones will be the poor shareholder structure that we will be writing or creating a YouTube video specifically for that. Now, coming back to Pernod Ricard, maybe some of you know the brand and the company, and I will be explaining what is going on with that company specifically. So as always, in terms of introduction, this time compared to companies like Nestle, for example, we are not, and I'm not a shareholder of Pernod Ricard. And as always, when you invest into public equity companies, of course, as any type of investment, they always carry a certain degree of risk. So looking specifically at Pernod Ricard, and I think this graph is pretty eye-opening on at least how the market is perceiving Pernod Ricard. You can see on the graph on the right-hand side that the share price or the market cap, the market valuation of Pernod Ricard has been nearly divided by 2 since 12 months, I mean, over the last year, actually. And so the company has been peaking at around 218 euros a share, and now is being around 110 euros per share. So there has been a pretty steep decline actually in the share price of the company. And we'll try to understand why is the market being so negative about the company. So let's go into that. But the first thing, as I always like to do, is because as I've been learning from Warren Buffett and Charlie Munger, you need to understand the business that you are potentially looking into and investing into. And I must be fair, I never analyzed. I'm invested into food companies, so consumer defensive brands like Nestle, for example. I had Unilever, Danone as well. But for example, companies like Pernod Ricard, I never had the opportunity to analyze them. So I wanted also to understand a little bit what's the company background, the industry dynamics, and this type of thing. So let's start with the company background. So the company is in fact a French multinational wine and spirits company. You see that they have around 20,000 employees. But what's interesting when I analyze the annual reports is that they have rough cut 1,000 employees less than last year. So probably they have been, I will not say restructuring, but becoming more efficient on the amount of employees that they had. And the company, so Pernod Ricard, as it is known today, and it's so headquartered in France, is in fact a merger of 2 companies, so Pernod Fils and Ricard, which I will explain very briefly in the upcoming slides about the history of the company. And has been, so the merger happened in 1975. And there, I will not say their mission statement, but their slogan is the art of togetherness. In French, they call themselves the créateurs de convivialité. So that's basically what they intend to do. And they have huge, a huge portfolio of brands with over 200 brands across the world. And I will also give you some insights about what are the strongest brands that they have. And actually, for me, it was eye-opening because I didn't know that Pernod Ricard, with the exception of Ricard itself as a brand that I knew before, was actually owning some of those very popular brands. So in terms of brands, so what are they into? So they are in wine and spirits, and in fact more into spirits than into wine. So they are into whiskey, vodka, aperitif, tequila as well, rum, cognac and brandy as well, and also some champagne that I did not know. I was expecting this company not to be invested into the champagne segment or sub-segment, and they are in fact. So, and they are considered one of the world leaders in premium international wines and spirits, and more specifically in spirits. So, and we'll come back to those brands later on when we'll be analyzing the company. But some of those brands, I can already mention, like Chivas Regal, for example, or Ricard, or Ramazzotti, for example, or the Champagne Mumm, that is also, at least for me in Europe, is a reference. Champagne are all part, in fact, of Pernod Ricard. So here you see how also, and this is how they group their brands as well. So you see that they have like those rough cut a dozen strategic international brands, where of course Ricard is the most known, at least for the European and French population. But you have Chivas Regal, Ballantine's, Absolut Vodka, Malibu, Havana Club, Mum, the champagne, and Beefeater as well. I mean, I did not know that. I never tasted. I mean, I'm not into this type of, let's say, drinking. I need to be very fair about this. I do like wine and champagne, but I'm not into this type of spirit consumption. And Beefeater, nonetheless, I see a lot of advertising on YouTube and on social media as well. So I didn't know actually that they were part of Pernod Ricard. And so then they have, of course, some strategic local brands. They have a strong presence in India as well. And then they have some prestige and specialty brands. You will see this coming back when we're going to be looking at the company financials and who is contributing how to the revenues, to the top lines of the company. So the history, very briefly, will not go too much into the details. You can read it by yourself and pause the video as needed. But as I already said earlier, so today, as Pernod Ricard is known, it's a merger of Pernod and Fils, and so Pernod and Sons, and Son, that was founded in Switzerland in 1805, and the company Ricard, which was founded in 1932 in Marseille, so the south of France, where the famous pastis, which is still today the brand Ricard, very well known in the south of France, was in fact a legal alternative to absinthe. And I have no clue what absinthe is, but it's a type of drink where there were some, let's say, some concerns about, let's say, regulatory elements related to this type of drink. And so between, let's say, the Second World War and the 1970s, so both companies, they thrived independently very well, and at a certain point in time, both companies decided to merge in 1975, which is now the merger of Pernod and Son, and Ricard is now the company called Pernod Ricard. And since then, and if you remember, we had this also in some videos, also for French headquartered companies like Louis Vuitton, Moet Hennessy, and Kering as well. So the company also, in the middle of the 80s, started to go on an acquisition spree. So they acquired Jameson, Coubaron, Seagram, with, amongst others, the brands like Chivas Regal, for example. They also acquired in 2008 Absolute Vodka. And in 2015, and Alexandre Ricard is still today the CEO and the chairman of the company, but he was at that moment in time appointed to the company as chairman and CEO. And the acquisition spree continued. So you see here, I will not go through all of them, but they continued to add acquisitions from 2016 to 2023, taking stakes, sometimes, I mean, not fully owned brands, but taking majority stakes in some of those companies recently over the last 1 to 3 years, for example. Maybe also linked to, I don't know, to COVID maybe, and the availability of cash. We're going to look at company financials later on. Now, in terms of what was also interesting compared to other analysis or other companies that I analyzed, when you look at the breakdown of share capital, in fact, there is no single strong shareholder in the company. If you compare, for example, with Nestle or with L'Oreal, where you have some very big institutional investors, that's less the case for Pernod Ricard. Actually, it's pretty much, let's say, diluted or fragmented. And one thing that I wanted to call out, nonetheless, because you know that I'm also an independent board director and I like to look at the governance, something when I was preparing this video and analyzing the reports of the company, I was positively surprised about the section where so Patricia Barbizet, the lead independent director, was leading, and how the company was communicating about their governance, the independence on some specific matters like the audit committee, the remuneration committee, those type of things. And I mean, I read a lot of financial reports, and it struck me, I had the feeling that they were really communicating much more and giving really the floor to this lead independent director compared to other companies, where it felt like she had the lead on, let's say, reassuring shareholders about the governance and the independence and neutrality of some, let's say, important decisions and important committees that are being run at the level of the board of directors. As I said, the audit and finance committee, for example, or the remuneration committee, amongst others. They have also sustainability committee. So I must say kudos to the company. It doesn't happen all the time that there is a specific communication by the lead independent director. So I really felt positive about this from a corporate governance perspective. And if you're interested, go on the Pernod Ricard Investor Relations website and have a look at what they are presenting from a corporate governance perspective, specifically led by the lead independent director. So one thing as well, because I wanted to add a specific section, because I don't know specifically or didn't know the industry before doing this video, I wanted to share also some more insights, because I had no clue who were the competitors and what were like the market dynamics or the industry dynamics on this specific industry, so specifically spirits and wine industry. And so I asked actually VinCGPT, as always you have the prompts below, I asked VinCGPT about who are the competitors, because Vinci has, in the meantime, we are January 2025, has 143 competitive clusters. So we have been adding 2 competitive clusters. And so this cluster was already existing, and I actually asked VinCGPT who are the competitors of Pernod Ricard, and I asked also VinCGPT to provide me the market cap and to provide me the results in a comprehensive table sorted by market cap, decreasing market cap. And I didn't know that Diageo, I don't know if I should call them like this, I think it's a UK headed company, and they are owning the brands Johnnie Walker and Guinness and Baileys, amongst others, which are brands that I do know. And I must admit, I like Baileys, but they are actually the largest in that specific industry. They are the largest conglomerate in the world. And Pernod Ricard, so you see here in the table, in the results of VinCGPT, you see that Diageo has around 70 billion of market cap, while Pernod Ricard has 27. Of course, remember that Pernod Ricard, the share price has been divided nearly by 2 since over the last year, so which explains also why the market cap has come down a lot. Probably they would have, if they would not have taken such a hit on the share price, it would be probably close to, I don't know, 50, 55 billion of market cap. Then comes Brown-Forman. I would like, and you see here on the right-hand side who Brown-Forman is. So the most known brand of Brown-Forman is in fact Jack Daniel's. And some of you may have seen in grocery stores that Jack Daniel's has also now a joint, let's say, collaboration or product together with Coca-Cola, for example. Those are like those black black cans that you can find in a lot of grocery stores. At least this is what I saw here in Europe, for example. And then you have Davide Campari, which is an Italian company. I mean, some of you know the brand Campari, and I do see also users asking the analysis of Campari in VinCGPT. And then we have Rémy Cointreau, which I think is also a French company, and Cointreau is also a very well-known brand in the wine and spirits, more specifically in the spirits world. But you see that Pernod Ricard is, from a market cap perspective, currently the second largest in the world after Diageo and before Brown-Forman. What is interesting as well, of course, when I like to analyze, and of course I don't have the time to go into all the details, but when I analyze industries, I like to look at the profitability of the industry as well, and also what is the cost of capital, for example, of the industry. And so currently, and I'm looking here at still 2024 data, the average industry cost of capital for beverages, wineries and distilleries, which is where Pernod Ricard, Diageo, Brown-Forman are part of, is around 8%, 8.05%. I'm expecting this now with the 2025 figures to go a little bit down, because we are coming down in terms of, let's say, macroeconomic inflation. But I mean, it's not a huge, so this shows as well that the industry cost of capital being at 8%, it's very reasonable for investing into public equity, which means that the risk is not as high as, for example, investing into tech companies, which have cost of capitals that are closer to, let's say, 11, 12, 13%, for example. And when I asked Vinci, what is the ROIC, return on invested capital between Pernod and Diageo, it was interesting to see that, and this will probably explain why Pernod Ricard has taken hits, that indeed Pernod Ricard is now below its cost of capital in terms of return on invested capital, while Diageo is still having a spread of 4.5%. So the spread is like the what they generate in terms of supplemental return on the average industry cost of capital. So they generate, or last year they generated 12.73% of return on invested capital, which is great. Remember that one of the KO criteria that I look into is that I'd like to have companies that have a return on invested invested capital of at least 6, and if possible even above 8 to 10%. And Diageo is hitting that milestone, in fact. So the spread is a 1273 minus a 805. So there is 4.5 of supplemental wealth that they generate on top of the cost of capital, which is great, actually. But there's some headwinds on the industry as well. I mean, as I said earlier, we are speaking here about wineries and distilleries, and there is a clear rise of non-alcoholic alternatives. You see also this in red wine, in white wine, that consumers would like to have the taste of those products, but without the alcoholic attribute to it. Across many countries, and I must say I've seen this even in Europe, you have public health campaigns against drinking alcohol, and you have even some let's say countries who prohibit strong advertising presence for this type of companies, so they cannot promote their products on, for example, on television, for example, or on radio, for example. So this really depends on each government and what are the public health, let's say, values and restrictions that they set up related to this tobacco or alcoholic producer. So there are, I mean, the industry is facing some headwinds nonetheless. And then, of course, as well, the wineries and distilleries, so as a sub-industry of the beverages industry or cluster, I mean, it's a discretionary spending. So consumers, when there is a high inflation, well, they're going to probably spend less on this type of products. And this is something that has been observed. And even when you read the reports of Diageo and Pernod Ricard, they speak about this, that they are saying that it comes back to some kind of normalization in terms of growth after the COVID, where in fact money was cheap because inflation was nil. So, and you remember there has been a lot of monetary, let's say, policy of easing and a lot of printing money. And so it was very easy to spend also on this type of products for the consumers. One thing that, and I don't necessarily show this in, I think it's actually the first time I'm showing this in video. One very interesting slide I've picked up from their annual shareholder meeting presentation is this risk matrix. Because, I mean, in order to understand the industry, it's very interesting to read financial reports. And in this specific case, I read the Brown-Forman financial report, the Diageo financial report, and as well the Pernod Ricard. And this slide I found very interesting, and I'm just highlighting a couple of risks, but I mean, myself being independent board director and having been sitting in audit and finance committees, of course we speak about risk management, and we discuss with the statutory auditor, we discuss with the internal auditors as well. And I found this matrix very interesting, where they show what are the risks that the company is facing, and what is the potential impact of the risk, and what is the likelihood of occurrence, or the probability of occurrence of the risk. And what I just want to call out is what is in close to the bullet points, the red bullet points 1 and 2, where you see that the company is facing some regulatory risk, which is basically what I just said a couple of seconds ago, is that governments may increase taxes because taxation is pretty high, like on tobacco, and also the company may face some administrative and criminal penalties, for example. There is an anti-alcohol environment and regulation, as I already mentioned, and this is again confirmed in this risk matrix by Pernod Ricard. And something that I was less expecting is the risk of counterfeiting and infringement of intellectual property. But indeed, when I saw this slide, I was like, no, they are right indeed, because there are products like Chivas Regal or I don't know, Absolut Vodka are, I think, premium products. They are expensive to some extent, and it's easy for some people, even criminals, to try just to replicate the product but not to sell the same product inside and just take the money from there. So I didn't think about counterfeiting and IP risk or infringement of intellectual property as a risk, but indeed they are mentioning it, and so the likelihood is high, but the impact is in fact moderate. But still, I found it interesting, and you can read the other risk. I found it interesting too, how again Pernod Ricard is showing their risk matrix. Not all companies show the risk in such a structured way. So I really like this, I must say, from a governance perspective. Before I forget it, as always, of course, if you like our YouTube channel, do not forget to subscribe to it and to hit the notification button that you get notification when we publish our videos. And as already said in the introduction, feel free to submit proposals to analyze specific companies as well. Right. So now going into the financials and the strategy as well. So this is a slide that I think is interesting because it kind of combines the net income, the revenue, and the return on invested capital for Pernod Ricard. So you see that the revenues are being now since year are flattening, in fact. So they have reached a plateau. So they have a growth issue. This is clearly, I mean, this is probably why the market has been punishing the share price of Pernod Ricard. And you see at the same time that the income, so that's the dark blue one, I see that the net income has come down. And of course, through that, the return on invested capital, as we saw earlier, is now below 6%, while before it was above 8%. So investors and shareholders are probably punishing, not probably, I can confirm this to you, they are punishing Pernod Ricard because they don't have an increase in revenues and the profitability is going down. So people probably they have been selling their positions in Pernod Ricard. Specifically when Pernod Ricard, if you remember what I said earlier, was at around 218 euros a share. That was like the peak that they reached rough cut 12 months ago. So one of the things to give you a sense of the order of magnitude as well of the companies to look at the overall revenue. So here you have been seeing the net income. So the net income has been rough cut at a little bit more than 1 billion last year, coming down from what was a little bit more than 2 billion. So I think they were at 1.5 billion last year, and in 2023 they were at 2.5. Just one thing here that should be mentioned is that they have a fiscal year that ends, I think, in June. So their fiscal year is not aligned with the calendar year. So in terms of order of magnitude, as I was mentioning, so they have posted last year top line revenues of rough cuts 11.5 billion euros, and you see they're coming down by 5% from 12.1 billion euros. So organic is minus 1% and reported minus 4%. So also remember when you look at those companies that have global operations that they are exposed as well to currency fluctuations. The free cash flow as well, which is of course an important measure because we use this for calculating the intrinsic value, the discounted cash flow, the discounted free cash flow to the firm. It's down by 33%, in fact, to 1 billion. But still, the company is making profits. I want to be very clear about this. When we look at where the revenues are coming from and what is the geographical distribution of revenues, you can see this here. This again is an extract from the Pernod Ricard Investor Relations information. So you see that from rough cut, let's say 12 billion euro, that's 1/3, so officially 28% of the revenues are coming from Europe, 29% are coming from Americas, and 43% are coming from Asia and the rest of the world. So you see that the Asia, rest of the world, is in fact a strong contributor to at least the top line. We don't have the figures in terms of profitability, but at least in terms of top line revenues, it's the biggest share revenue with rough cut 5 billion coming in. And what is also interesting, this is important to understand when you analyze Pernod Ricard, because they are apparently relying as well on global travel retail, probably linked to those duty-free shops that you have in all those airports where, you know, it's not just about perfumes and cosmetic products, but you have a lot of wine and spirits that are being sold in duty-free. So obviously you can imagine when COVID hit, there was no global travel. Of course, there the company took a hit. But so what is important to understand is what is the amount of contribution of global travel retail to the overall Pernod Ricard top line. It's in fact 6%. So, I mean, it's still not huge, but it gives you a sense that $1, let's say, out of 18 or $1 out of 20 is coming from global travel. And India, so they're making specific focus on India in their financial report. So India is now already 12%. So, and India has been growing compared to other countries. You see even continents like Europe and Americas that have come down from the previous year. But India has, I even believe that it had the strongest growth from a geographical perspective for Pernod Ricard's annual revenues last year. And then when we look at the brands, I mean, I already introduced some of the major brands earlier, but when you look at the brands, you see that their strategic international brands represent roughly 2/3 of their overall revenue. So if they have an issue with those brands like Ballantine's, Absolut Vodka, Jameson, Chivas Regal, Mumm, Malibu, Ricard, Beefeater, of course, I mean, this will hit the top line and the bottom line of the company. The strategic local brands, they represent 18%, and that segment has been growing compared to fiscal year 2023, so that has been growing by 5%. Specialty brands have come down by 2%, but they only contribute to 7%. And strategic wines, they only represent, in fact, 4% of sales. And there they had a decrease of -9%. When you also read the shareholder meeting presentation, so they have been, and I think this slide is very interesting because we're going to reuse this midterm ambition figure later on to estimate the intrinsic value of the company. But you see a little bit what is the bands of growth that they want to have in terms of gaining market share. And you see that their intention is to have an organic net sales growth of between 4 and 7% midterm. So midterm is something like 3 to 5 years, right? And so you see these gray bands, and they are since fiscal 22 in a program that is called Transform and Accelerate 2. They don't share too much details about it. They're going to give you some details about what they're investing into. But you see that, of course, I mean, when you look at a company like Pernod Ricard, similar to consumer defensive companies, this is not a high growth company. I mean, we are here clearly in a value investing territory where the growth rates are a little bit above, let's say, macroeconomic worldwide inflation rates of 2% and above, let's say, global GDP growth, in fact. So you see that they want to actually outperform that, but it will not be 10-15% growth. So just, again, to re-explain, when you will be doing the valuation of such companies, and specifically this company, that, I mean, you cannot ask Vinci Petit to do an intrinsic valuation with 10% growth over the next 20 years, because that will not happen. That would be foolish of you doing this. So in terms of strategy, so they are explaining a little bit so how they want to transform and accelerate. So they speak about growing the strategic brands and specific category leaders, building, harvesting, and commercializing. And one of the things as well, here they don't give too much details. I will come back to their strategy and a little bit their marketing spend in a couple of slides. But first, one thing as well, and if you remember, let me just come back here on the right-hand side on the bottom, you see those strategic wines, and you see that the segment is decreasing. And it was interesting to see that they are also divesting from some brands that they're not interested into. And I mean, they're sharing this. So this is typical for very big companies, specifically in the consumer space, that they do what they call active portfolio management or portfolio restructuring or portfolio optimization or disposals or divestitures. So it doesn't surprise me. But you see that, for example, in the wine industry, I know, for example, living in Spain, the Campo Viejo Rioja wines. So I didn't know that they were part of Pernod Ricard, but it feels like that they're going to be divesting from that brand, for example, as well. So this is a slide I wanted nonetheless to discuss very briefly with you, and this is also coming from their annual shareholder meeting presentation. What I found interesting is the slides or the visual on the left-hand side, where they are showing that, so they are a data and AI-enabled company. Of course, they will not provide a lot of details, but what they are trying to do is to optimize their, let's say, advertising spend and being better at forecasting, making predictions when to spend money in terms of marketing and on which channels. And this is basically what they are explaining here. So just to give you a sense from their So they have a ratio of spend between marketing and sales of rough cut 16%. That is kind of constant between fiscal 23, fiscal 24. And they spend rough cuts 2 billion euros on advertising and promotional spend, so, which is, I mean, it's not small, 16%, but of course those companies have to be present at events, they have to be present at in social media and those type of things. So of course they have an important spend on this. And what is interesting is, at least what they claim from an independent study, that in the drink industry, that Pernod Ricard is the company that is been spending or has the highest level of skills, or the highest amount of skills dedicated to data and artificial intelligence in-house. It's interesting to see that Nike is, in this study of 2024, is being the highest one, followed by General Mills, Procter & Gamble, then comes already Pernod Ricard, and then followed by Altria, which is a tobacco industry, and then you see Brown-Forman and Diageo, which are not too far away behind Pernod Ricard. Then on the right-hand side, so they are explaining also in their investment report what they invest into, and they speak about, so they are partnering also with some external companies really to optimize their advertising and promotional spend, in fact. Now, going down into the share price analysis. So this graph, you already saw it. So today the share price is at a rough cut 105 or 110 US dollars, coming down from more than 200. And one of the things, and of course, I mean, we are using, and I'm myself using since now more than a year, that we have launched, that we have created Vinge. We have launched it May 1st, 2024. I use VingeGPT for my own investments as a value investor. And of course, one of the first things that I do, and this is explained also in the training, The Art of Value Investing on Udemy, is that I'm asking VingeGPT, do me a fundamental analysis of Pernod Ricard and show me the results in a comprehensive table. This is a prompt that I've been using here. And what is interesting in terms of relative valuation, you see that the price to earnings and price to cash flow with the share price of 105.50 US dollars is being very close to the undervaluation threshold. So relative undervaluation threshold of 15. The debt to equity, which is something I like to look into as well, is very decent, below 1. And also what is interesting for me, at least as a value investor, because as I always said, I have two ways of making money, is buying cheap and selling high at a certain moment in time. But while my money sits still, sometimes it can take 1, 2, 3 years until the market then weighs correctly the company and the assets of the company. Well, during that period of time, I want to earn money, so I'm looking at getting a fair amount of dividends as a passive income. So the dividend yield, you can see it here, is sitting at 4.76%, and the dividend payout ratio sits at 45%. So they still have a, let's say, a fair amount of margin of not having to cut their dividends in case, of course, the net income does not continue to decrease. Of course, that's part of the story. So the fundamentals look not too bad at all. You could discuss that the ROIC and the return on assets is a little bit low. That's true, because I'd like to have something at least 6, if not 8 to 10%. And the PE and the price to cash flow is a tiny bit high. So, but you will see this. I will come to that conclusion when I will. For myself, I would analyze, would it be worth investing today into Pernod Ricard, yes or no? And one of the things I asked Vinge as well, I said to VingeGPT, can you make a fundamental analysis side by side of Diageo, which we saw is the category leader in that industry or sub-industry of beverages, wineries and distilleries, versus Pernod? What I was surprised, in fact, is that Diageo has even a lower price to earnings and price to cash flow. The dividend yield is a little bit lower as well at 341%. The dividend payout ratio is a little bit higher at 58%, but I mean, it's still below the upper threshold of 70, and they have a fantastic ROIC at 12% and a return on assets at 8.5%. They're a little bit more leveraged. They have a debt to equity ratio of 1.9, but it's still very reasonable. It doesn't stress me, but of course they are less, let's say, liquid. Also, when you look at the cash to debt ratio, they're a little bit less liquid than, for example, Pernod Ricard, but I still believe it's very, very reasonable. Also the let's say the fundamental analysis of Diageo. And so, and of course, as always, I mean, Vinci is not just pulling the data from its curated investment universe data, but of course we have trained Vinci to give you an interpretation. So what I was now commenting, actually, you could get it by VinciPT through text format or through a voice as well. In any language, remember, it's not just in English. And then, of course, I mean, the holy grail of any investor and any value investor is like, okay, but what's the intrinsic value of the company, right? The market is giving me today the company at $105.50 US, but what is the intrinsic value of the company? So I asked VinciPT with a very simple prompt, what is the intrinsic value of the company? And it comes up with 3 values because we calculate intrinsic value following 3 methods: dividend discount model, discounted cash flow, discounted future earnings. And you see, in fact, that we are at between 58 and 90 US dollars. But nonetheless, one thing that because Vinci per default, if you are not explicitly mentioning what is the growth rate, will take 3%, 30 years valuation, and we'll use the sensitivity analysis on the cost of capital. But I mean, as we saw earlier, and we'll show you the slide again, so management is saying that they are targeting, you see it here, that they are targeting 4 to 7% midterm ambition. So I was like, okay, let me a little bit defensive, a little bit more than 3%. Let me ask VinciPT to calculate the intrinsic value with a 5% growth rate instead of a per default 3%, and recalculate the intrinsic values. And you see that, of course, compared to this slide, that so the dividend discount model is not changing because that is linked to the dividends, and growth is not playing a role on that. And I'm considering the dividends will remain constant, which is a choice. But the discounted cash flow and discounted future earnings are, of course, changing as we are factoring in a higher growth, so 2% more, 2 points more versus the 3% earlier. Of course, the intrinsic values are growing to 74 and 115. Of course, I asked as well, what's the cost of capital that Vinci has been using? Because, I mean, you may have seen this for the Vinci users in the room, that we have introduced sensitivity analysis on the cost of capital, rough cut, I think it's 6 weeks ago. So now, in fact, when you ask for the intrinsic value, Vinci will automatically pull the industry's cost of capital as I believe, a valid proxy of cost of capital instead of the previously per default 7% for any industry, and will then, in fact, factor that as a discount rate into the intrinsic value calculation. And and this will then, of course, before I show the NPS scores, this will tell us what is the intrinsic value, because it depends then on 5% growth rate, 30-year valuation without terminal value, and in this case 8.05% cost of capital, which is the industry cost of capital as a proxy in terms of discount rate. One thing that I like to analyze as well for companies, specifically big companies, is what's the net promoter score, or what are the net promoter scores for employees and for customers. You can see that for Pernod Ricard, the net promoter score, the NPS for customers, is pretty high. They have a good customer satisfaction, customer loyalty. The CEO approval is pretty high as well, but we didn't find information about employee net promoter score. While for Diageo, we have all the metrics in Vinci available. So these metrics have been updated, I think it was end of December or the first week of January 2025. She said they still have a strong NPS of 43. The customer satisfaction, customer loyalty is high. The employee net promoter score is pretty high as well at 47, and the CEO approval rate is also high at 85%. So, I mean, both companies, at least from the metrics that are available, I mean, and I've seen other companies like Guess, for example. You may know this, I will say fashion brand. I will not say luxury brand, but fashion brand, Guess. I mean, I remember having seen very negative scores on NPS and eNPS, for example. So, but both companies here, it looks like that customers and employees are happy in those companies. So to summarize, I mean, coming back to the intrinsic valuation, because most of you want to know, is it today worth investing or not, or at least what is my opinion? And again, it's not a solicitation for you to buy or to sell, but I'm just sharing very transparently how I would look at Pernod Ricard. And today I'm not a shareholder of Pernod Ricard. And I always compare here as well as a sanity check check with Morningstar's fair valuation. And what is interesting is that Morningstar has a range where they consider that the fair value of the company is at around $140. But remember, we have no clue what are the assumptions that they are using. And they consider that the window, the range between really overpaying for the company, that would be above $162, and when the company starts to get cheap is below 121. While on our side, with the 5% growth assumption, the 8.05% cost of capital, and 30-year valuation, we are actually very close at a currently fair valuation of 115 on future earnings, and the discounted cash flow on 74.53. So all in all, I mean, I would consider that with those assumptions that as a good investor, good value investor, if you want to have a safety margin when buying such a company, that the price should still go down a little bit. So, I mean, because you remember that when I invest into companies, I like to have like 25 to 30% safety margin. And I mean, this 25% undervaluation, at least to the current financial metrics, I don't know how the future will look like for Pernod Ricard, but it would start at below $90 per share. So it's at 105. It's still a little bit overvalued, in my opinion. I mean, it's cheap, and even Morningstar is saying the same, but there is still opportunity potentially to wait if the share price would go down, and you never know what happens in terms of macroeconomic environment. So all in all, as a conclusion, I mean, my honest feeling, and having analyzed and having had the opportunity to analyze Pernod Ricard, Brown-Forman, and Diageo as well, because I looked into the three companies, I have honestly the feeling that Pernod Ricard is a nice company with a wide moat, which is something that Morningstar shares as well. They are nonetheless underperforming compared to Diageo. So Diageo is, I mean, from a return on invested capital perspective, definitely much stronger, even though the dividend yield is a little bit lower and the leverage in terms of debt to equity is higher. Remember that the industry is facing challenges. I mean, we are speaking about alcoholic beverages here, so wines, distilleries, spirits, those type of things. I don't know what the future will look like for those companies. The dividends appear appealing, specifically the one of Pernod Ricard, but this is linked to the fact that the share price has come down a lot, which is less the case for Diageo. And as already said, that if I think that it's reasonable to use a single-digit growth assumption of 5%, because that's the target of management instead of 3% per default for Vinci. And that I still believe that, I mean, if I would have to invest into it, I would probably still wait a little bit. At least that's my perspective. And again, this is not a solicitation for you neither to wait nor to sell the company. I'm just very transparently sharing if it would be for me, I would probably still wait a little bit, or at least go in with the first round and then potentially wait and even continue doing cost averaging and buying cheaper. But my main point or my main concern of investing into this industry is I have no clue how the spirits industry will look like in the future. I think there is a maybe higher risk. I do not know. But again, I never invested into this type of industry, but I just want to very transparently share how I feel about it. So with that, hope that this was interesting for you. Thanks for our YouTube user who has submitted the proposal of Pernod Ricard. It was also for me an interesting experience analyzing the company. Thanks also to Adriano who has prepared the analysis for Pernod Ricard as well. So with that, thanks and talk to you very soon.